Well, it's obviously, and let me first maybe talk about the human dimension of what we're all experiencing is, our job number one as a company has been and is and will remain to protect the health and safety of our employees and continue to serve our customers and help in our local communities. And I'm actually very proud about what our company has achieved here in the last couple of weeks. Now, the economic phase of the coronavirus is, of course, a very ugly one. Having said that, and in particular, take into account during the month of March, we saw a pretty heavy impact globally from the coronavirus. We're actually pretty pleased with our results in Q1. We essentially reported flat revenues. We kept our operating margin despite these headwinds, which just shows how strong our business is and how resilient our underlying operations are. And obviously, keep on going.
Oh, I was just going to say, and Mark, you've been able to give guidance as well, which is down 13 to 18% for the full year. How have you managed to come to that estimate, and what have you been able to learn from sales in regions like Asia as to what might happen in the US in the rest of the year?
Yeah, and Wilfred, to that, first of all, we withdrew our guidance mid-March, and actually we're not establishing new guidance because very simply, there's so much uncertainty around us, it does not make sense to establish any meaningful guidance right now. However, and that's what we will talk tomorrow about. Investors have probably three fundamental questions. One, what type of recovery do we expect? And we expect a U type of recovery. Two, how are we going to protect our margins? And essentially, we more than doubled our net cost program. And three, how does our liquidity look like? And we finished Q1 with $2.8 billion cash. And on top of that, we have another $2 billion of facilities. So we have ample cash and liquidity to sustain this crisis.
It's hard to find a freezer that you can actually buy and get shipped to your house right now, Mark. Is it because there's so much demand as people stay home and they stock up on things like meat? Or is it because your supply is disrupted and you can't make them?
First of all, I appreciate that you were checking on freezers. But having said that, what we saw, and by the way, that's not only in the US, we saw that also in other markets, in particular, the beginning at the outset of these crises when people do some hoarding, there's a lot of demand for really essential products, freezers, washers, a second fridge, etc. That is not atypical. We've seen that in the US, we've seen that in Europe, and we've seen that in China. As the virus or as the crisis progresses, I would say you see more of a normal mix. Now, specifically to your question about production, we actually did not completely shut down operations. Very simply, consumers who are ordering right now products, they do it with a reason, and we won't let the customers down. So we essentially kept our factories always in line with the guidelines, but we kept it open for most of the time.
Across all regions, Mark, or have there been pressures, particularly in places like Mexico, with shutdowns?
Of course, you have the on and offs, but, to give you a little bit of perspective, over the last 7 or 8 weeks, on average, we had 80 to 85% of our factories open, which is quite amazing given everything going on. And of course, you sometimes had some government-mandated shutdowns like you experienced right now in India. Sometimes we had to clean and sanitize the factory, but on average, we had 80 to 85% open. And I also recognize that's, of course, very different from what you hear right now from the broader manufacturing landscape, but it's been driven for two reasons, or by two reasons. One is, we want to serve the customer. The second thing is, we essentially believe that what we call slow walking a factory, i.e. running at low speed, low supply base, and accepting a low yield, if you want to say so, is the safer way to establish a good supply base and a good supply chain. So we slow walk the factory, and we learned a lot over the last 7 weeks.
Still, you have thousands and thousands of employees around the world, Mark. What are your strategy sessions like right now with your top lieutenants about how you are going to safely reopen and protect your workers and when that's going to happen?
Yeah, I mean, first of all, on a global level, and of course, we all know this crisis didn't necessarily come with a leadership manual how to manage. So you learn. But pretty much ever since late January, we have weekly, daily calls, video chats. And in an odd way, even though we don't see each other, it almost feels like we're close together than ever before. So that's actually the nice thing, if you want to say so, of this crisis. Now, in terms of reopening, and again, it gets back to the earlier point I made, is we never shut down. We didn't go into hibernation. We kept most factories open. Even to give you an example, Italy, where you heard all the news, we only had the factories closed during 2 weeks. So we kept it running. Now, as you can imagine, you learn a lot if you keep on running and how you make it every day safer. Because as we all know, this virus is an invisible enemy. It's not a known hazard. It didn't come with a safety manual. So listening to the medical advice in dialogue also with the respective governments, I think every day we learn more, and you will learn that the devil sits in the detail. And today we're in a situation where we can say with a high degree of confidence, our factories are as safe as they can possibly be.